Alrighty, guys, so we have to talk about the Fed meeting, tapering, inflation, how the stock market's reacting to the conclusion of this Fed meeting, the press conference, and the Q&A. And let me tell you, the markets are ripping right now. We have the S&P up 1.5%, the Dow's up 1%, we have the Nasdaq up over 2%, and we have the Russell up 1.8%. So let's talk about it. Tapering, and we kind of already knew this heading into the meeting, but they're looking to double the pace of reductions in asset purchases beginning in mid-January. They're going to do this by reducing the monthly pace of Treasury securities by $20 billion. So they're going to reduce those purchases by $20 billion and mortgage-backed securities by $10 billion. And similar reductions will be appropriate each month if the economy continues to recover. And the tapering is set to finish in mid-March, which we kind of knew that already, a few months sooner than anticipated back in November. So initially, I think they were looking to finish that by maybe May or June or something like that. But now they're speeding it up. And according to a lot of this data, the projections that came out from the FOMC, inflation is looking to die down a bit. Interest rates, they're expecting 3 hikes in 2022, which we kind of already knew that as well. And when it comes to inflation, it's the PCE. Median PCE inflation is expected to be 2.6% for 2022, 2.3% in 2023, and 2.1% in 2024. So let me pop this up really quickly and show you guys so we can look at it together. This is straight from the the Federal Reserve. This is the statement. There's a lot of data here. There's a lot of pages, which we're not going to go over each and every page here, but I want to focus on this one. So PCE inflation, you guys can see it right here. It is currently at 5.3% in 2021. 2.6 is the median for 2022. 2.3 is for 2023. 2.1 is for 2024. And the longer run, you guys know the target is 2%, which we're a lot higher than 2% right now. We're something like 7-8% for the CPI. And the difference between CPI and PCE is the CPI measures the change in the out-of-pocket expenditures of all urban households, and the PCE index measures the change in goods and services consumed by all households and nonprofit institutions serving households. So as of now, it's a lot higher than 2%. And some will argue if you measured inflation the way that people did back in the 70s and I believe in the 80s, it would be a lot higher than 8%. It'd be close to 12, 13, 14. I've heard some people say 15%. So at this point, PC inflation, that is the median targets for the next couple of years. Now, core PCE inflation, which excludes food and energy, is 4.4% in 2021. It's 2.7%, the median for 2022. That's expected 2.3% in 2023. You guys can see that here. And pretty much everybody says by 2024, it's going to be pretty dang close to that longer run number, 2.1%. So now that we have, the thing is here, guys, pretty interesting point. We've had so many years, it feels like, maybe not so many, but a couple of years now of high inflation. Maybe 1 or 2 good years of high inflation, pretty much since COVID, right? So now we're going to need years of very low inflation, maybe even deflation to bring that average down, because now it's, 6, 7, 8% CPI, is what we're seeing right now. To get it back down to that target 2%, we're going to need years of 0% inflation, maybe 1%, maybe even some deflation. So people don't really, realize that. They think, oh, we're going to get the 2%. But eventually, it's going to be hard to get to that 2% if there's no, if there aren't years of under 2%, if that makes any sense, if we're talking averages here, right? So those are some targets when it comes to inflation, which I really wanted to focus on in this video. And another thing worth mentioning is interest rate hikes, right? We're expecting 3 hikes in 2023. And let me see if I could actually find that here. Here it is. This is perfect right here. So in 2021, let me make sure you guys can see this. Nope, you can't see this actually. Let me shrink my face. Hopefully you guys saw the last page. If not, you heard how I was talking about it, right? So we can see here in 2021, pretty much all the FOMC members were looking at 0%, right? This is the midpoint of target range or target level for the federal funds rate from the FOMC participants. So pretty much everybody was at 0%. Well, everybody was at 0% for 2021. Now, 2022, we have some a little bit above 0. We have some above 0.5, and we have a couple of people around 1, some above 1%. Now, 2023, you guys can see more people are looking at the Fed funds rate around 1.52%. And we have 2024, more in the 2 to 3% range. And then longer term run, they want the Fed funds rate anywhere from 2 to 3%, which one would, consider a very healthy, range. And at this point in time, with the high inflation, this is how they're going to fight it. They're going to increase the rates. And with the thing is, with those projections, if they're true, which a lot of the time the Fed's projections aren't true, but sometimes they are. So let's say if the median inflation, PC inflation next year is 2.6%, well, less inflation is good for growth stocks, right? Because they don't have to raise the interest rates as aggressively. So that's why we're seeing a lot of these growth stocks right now, which I will cover in my video later on today. These growth stocks are going crazy. We have DraftKings starting to rip back up, AMD, Voyager, Nvidia, SoFi, ChargePoint. Literally, we had a crazy U-turn in the markets this year. So at this point in time, inflation, it looks like it wants to go down a bit, according to the Fed, which we all know we can't really trust the Fed fully, but that's what they're saying at this point, right? And next year, when it comes to the Fed's, meetings next year, they have 8 meetings in January, March, May, June, July, September, November, and December. And in my opinion, and me, Kevin, brought this up, and I was like, wow, it's a really good point. I was watching his live stream earlier, and I'm going to obviously give him credit for bringing this to my attention, and I'm saying it right now. Most rate hikes are probably going to come in the latter half of the year. In January, there's a meeting. Tapering probably won't be done. It won't be done in January, so we're not going to get a hike in January. Will we get a hike in March? Probably not. Potentially. I don't know if they're going to, okay, so now they're looking to finish the taper by March. Are they going to finish the taper and then boom, right then they're going to hike the interest rates? Probably not. In May, are they going to do it? Give it a little bit of wiggle room between March and May. What is that? March, April, May. So 2 months between March and May. After the taper ends, then they're going to hike interest rates. That's more likely. So I think interest rates could start going up in May. And who the heck knows what other meetings they're going to hike it after May. But if we get those 3 hikes, let's say we get one in May, one in July, one in December or something, for example, that's kind of what could happen at this point in time. So these growth stocks are like, okay, we have the Fed projecting less inflation. Now we know the tapering is going to be done in March, which they already knew that. And now the hikes are probably going to be pushed back for a couple more months. So the markets are starting to run on that, in my opinion. The growth stocks here, again, like I said, a lot of these stocks are turning green, which is great for us that own them, right? I personally own DraftKings, SoFi. I own a couple others that are starting to do very well now in the short term. So we'll see how it goes down, guys. This is very interesting. SPY right now is breaking out clearly above 465. We got over 470. Triple Q's trying to get back over 400. We're at 395 at this point in time. And if we break 400, this might start going back to 408, like I've been saying a lot here on the channel. So that's pretty much it. Nothing crazy. Nothing that's too surprising. Really anything at all that came out of this Fed meeting. But ultimately, what I was looking for really was the projections for inflation, all that good stuff. And, the markets are running on running after the Fed meeting, which a lot of people expected. Some people didn't expect it, and we're getting it. So what do you guys think? Drop me a comment down below in the comment section. Make sure to hit the like button, subscribe, do all that good stuff. We're trying to get 25,000 subscribers by the end of the year, and I can't do it without you guys, and I appreciate all you guys as always. Make sure to check out my Patreon if you want all my buys, sells, call-outs, morning update videos, plus more. That's on Patreon, link down below. Make sure to also get your 5 stocks from Webull. All you have to do is use my link, deposit any amount of money. We each get 5 stocks, and you could also get $50 from M1 Finance. Deposit $100 with them. We each get $50. All that's linked down below. I'll catch you guys in the next video. I'll pop one up here that I made earlier. 3 oversold stocks to buy. Check it out. I'll see you guys there. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out. And oh man, I'm talking too fast in this video because I'm stuttering over my words, and we got to get to the next video. I'll see you guys later.